Michael Burry just bet all in on a crisis. Michael Burry is someone who has made millions of dollars from the dot-com bubble during the 2008 recession. And now he believes that this ongoing situation means big business again. Upon searching about his portfolio, we found out his disclosed investments in 11 stocks, which are worth some $168 million, and that is not all, because an astonishing $123 million comes out of his confidential holdings. But what makes Burry so confident about this crisis? And what can we learn from his investing strategies? This video will explain exactly how Burry manages to make the most out of frequent recessions. But before we jump into his confidential holdings, we have to talk about his publicly disclosed holdings. Understanding stocks the right way and investing your time in learning about all these complex investing strategies is a habit that is going to pay some serious dividends in the long run. So make sure you watch the video till the end so that you can utilize it to the fullest. Welcome to 5-Star Finance, the place where we teach you how to achieve financial freedom. Hedge fund owner Michael Burry is a blunt example of how we can take the offensive in the market instead of lurking on the defensive. When everyone seems to be playing it safe, Burry seems to be making decisions that prove fruitful, even during the recession of 2008, which means we can learn a lot from his way of investing in stocks. We all know that investors with net worth more than $100 billion need to disclose their holdings in the form of a 13F document, and that is all we need. According to sources, there are some 11 stocks which are bringing in big money for Michael Burry. Keeping the foreseeable inflation in mind, Burry has chosen some stocks which are suiting the ongoing situation in the best way. There is only one thing that investors like Michael Burry have in mind, and that is a weapon in the form of the input costs. You can either use it as a self-destruction button or use it as a bomb to make some serious profits, and Burry obviously chose the latter. Now, input costs are the costs that occur during the creation of a product or service. Some examples of this can include cost expended on labor, material, fuel, buildings, and equipment during the creation of a product. Now, this all means that as the prices rise, the input costs will rise. And for all the companies out there, this means a straight loss of margin. For example, the airline industry is undergoing two problems at the moment, which are high fuel prices and wages. Now, that ultimately means that the airline industry has to increase the ticket prices, and as inflation rises, the tickets should also get expensive. But there is another face to the devil, and that is the lower consumer activity that will follow the high ticket prices imposed by the airline industry. Now, Michael Burry is completely aware of the situation, and he knows that the company he is investing in are going through the aforementioned scenario. When we look at his stock portfolio, we can see that Burry has stocks belonging to 4 common themes, such companies like Booking Holdings and overvalued in the travel industry, Google, Discover, Global Payments, Meta Platforms in the tech sector, and stocks like Bristol-Myers and Cigna in healthcare. Apart from that, Burry also has stocks like Nexstar Media Group and Sportsman's Warehouse and Value. Burry is aware that the crisis is also revolving around the companies he is holding on to. For example, Book Holdings earns its profit when people book their travel tours with them. And as the ticket prices will rise, the profits will also rise. And similarly, overvalued owns a company that extracts natural gas, and as the gas prices will rise, so will the profits for overvalued. To get a clear understanding, let's take tech stocks for instance. There are companies like Google and Meta in Burry's portfolio that have no input costs whatsoever, as their business is entirely based on the internet, so that makes a lot of sense. Similarly, Burry's holdings in the healthcare industry have characteristics of strong pricing power, which means that they can raise prices. Both Cigna and Bristol-Myers have shares in the raw material industry, which allows them to gain a big share, consequently allowing them to control prices. Lastly, Burry also has some value stocks that are trading way below their true value. That also means that as the stocks are already trading way below their true value, there isn't much room for them to fall below their low value. Almost all the companies in Burry's portfolio have strong profit margins, major competitive advantages, and strong pricing power, as well as huge cash positions followed by low valuations. The most important characteristic out of them all is the huge pricing power. Warren Buffett once described pricing power as the most important aspect of any business, especially during inflationary periods. Having a strong grip over pricing power means companies can maintain their profits even as inflation surges. The interesting thing is that Burry has put options on Apple stock. A put option means that there's a contract that he can sell 100 shares of the company at a certain price. For example, let's say that someone has a put option on Google stock with a strike price of $3,000 with an expiration date of September 7, 2023. This put option will give the owner rights of selling 100 shares of Google at $3,000 till September 7th next year. Now, Burry has a put option on 206,000 shares of Apple stock, but we don't know what's the strike price and when the put option expires. Now, the reason why Burry is buying puts on Apple is the high input cost that comes while producing products. We all know that an iPhone is a gadget that is assembled with great equipment, and that is where the cost fires up. So now we know what Burry's portfolio looks like and from where that $168 million come from. But with that being said, what about the remaining $123 million? By using the process of elimination, we can find out from where Burry is gaining his remaining funds. There are 6 places from where Burry can be gaining his remaining revenue. He could be holding cash, or depending on Forex exchange, or commodities and farmlands and shorting stocks, shorting crypto, or even betting against some bonds can also be an option. Now, these are the only places where Burry could be investing his funds. But the reason why Burry won't hold on to cash is that it will lose its value at a frightening pace. So what about the Forex exchange? The Forex exchange is a global platform where people exchange government-backed currencies, also known as fiat currencies. Forex trading means betting certain currencies to outperform others. For instance, someone can bet on the Chinese yuan to outperform the dollar by exchanging the dollar for the yuan. This would allow people to exchange the yuan for the dollar if the yuan goes up in value. While the dollar is degrading at a fast pace, it is performing quite well on the Forex exchange because other countries are printing even more money than the US dollar. So that doesn't look like a likely option as well. The next option can be to purchase farmlands and commodities like gold and silver, as we know that historically these options have been a good defense against inflation, but only the moderate inflation. In the modern hyperinflation, best assets might be somewhat different. But during modern inflation, the government tries to prevent the currency's downfall by taxing all the farmlands and commodities so that they can gain some progress. So we can be certain that Burry is not betting on farmlands and commodities. So, is Michael Burry betting on shorting stocks? Burry stated that Microsoft traded 5.2 times its shares in 2002, 3.3 times by 2009, and 0.5 times so far. Amazon traded 5.7 times by 2002, 6.6 times by 2009, and 0.9 times so far. So that shows that enough takes time. It might be logical to state that Burry is betting on shorting stocks. He once bought Tesla put options before exiting in October 2021. He switched to straight-up shorting instead of the put. Shorting is when you borrow 100 stocks and sell them in the open market. Short sellers will then have a goal to buy those shares at a lower price. Let's say you bought 100 shares of a stock for 40 euros and bought them back for 35 euros. Because you bought the shares cheaper, you're now making 5 euros from every share. So instead of buying stocks for lower prices and selling them at a higher price, short sellers do the inverse. For this reason, we have every logic to believe that by shorting stocks, Burry is making the rest of his income. It is the critical analysis of understanding these stocks and how they'll perform that makes the difference. For investors to flourish during inflation, it is highly important to learn about these stocks right away. For that purpose, we've given a free ebook in the description below which will explain the 6 most important stock categories. Check out the video we handpicked for you, and we'll see you in the next one.